Hey everybody, I just wanted to give you a quick video about mergers and acquisitions. And merger simply just means two companies, of course, merging together. Acquisitions is when one company is buying out another company. The reason I want to bring this topic up is because not too long ago, Hasbro Toys was looking to buy DreamWorks Animation, and that deal, of course, didn't fall through. But you have other deals like Dollar Tree and Dollar General looking to buy Family Dollar. And then Tyson Foods actually bought Hillshire Farms last year in competing with Pilgrim's Pride. These mergers and acquisitions happen all the time. And recently, Staples just decided to buy out Office Depot, and they were actually pushed by a private equity firm to do it that had a lot of ownership stake in both companies. But these acquisitions simply mean that Staples is going to be the buyer and Office Depot is going to be the buyee. Now, usually when you have these acquisitions, the company that is doing the buying is always going to take on debt and take on, negative effects. So that's usually going to have a negative effect on the stock price. And then when you have a company that's the buyee, they're usually relinquishing debt and they're usually offered a higher price per share than what they're currently trading at. So if you look at the stock market today, you could see that Staples dropped tremendously while Office Depot gained tremendously. Now, both of them had gained a lot the day before because it was rumors that it was going to happen, and then it finally did. But now that Office Depot is going to be basically giving up all their debt and giving it to Staples, that's a positive sign for them in the short term, and their stock price is going to go up because of what Staples offered. So currently Office Depot was trading at like maybe $9, and the day before was at like $7 to $8. But then Staples offered to pay, I think it's $11 a share in stock and cash. So of course Office Depot's price is going to go up. But because Staples is spending money and taking on debt, their stock price is going to go down. So their stock price was at like $19 and it dropped down to like $17. But in the long term, this is going to help them as a unit because since they're coming together, they're probably going to close some stores since a lot of times they're right across the street from each other. It's kind of like when you had CVS and Rite Aid across the street, and when CVS and Eckerd, and when CVS bought Eckerd, you didn't see Eckerd anymore. Or if there was no CVS around, Eckerd just turned into CVS. So that's basically what Staples and Office Depot is going to do. We'll see if they're actually going to keep the companies separate and maybe just close stores down. Sometimes entities will do that, but sometimes they might just eventually just take over. Southwest, for instance, they bought out AirTran. For a long time, AirTran was still running until it was finally complete. Now AirTran is no more and Southwest owns all of it, and it's just all Southwest Airlines. So that's just an example of how mergers and acquisitions work. Whenever you hear about it, now I don't want to say just go buy in on the hype, but you want to monitor these stocks when you hear about these news, because the company that's going to be bought out is usually the company that's going to spike in price. Just like when Hasbro was rumored to buy out DreamWorks, Hasbro price came down a little bit and DreamWorks price went up. Tyson's Food, when they bought out Hillshire Farm, their price came down a little bit and Hillshire Farm's price went up. Now, a perfect example is, let's say a stock price is $60 and then you have the stock that's being bought out is $30. Well, let's say the stock that's $60 is going to buy the other stock's price out for $45, and they're going to buy it all out in stock in a 1-to-1 ratio. Well, then that company that's worth $60 price is most likely going to come down to about $40, and the other stock's price is going to come up to $40 to make it an even trade. Or if that stock's price stays around $60 and the other stock's price comes up to $45, that means that they're going to get a share in a fourth of a share. So that's kind of how those situations work out. So always just kind of be on the lookout for these mergers and acquisitions and see maybe if they can benefit you, because they're definitely a short-term gain and you can get a lot of profit from them.